Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
And good day, Rick Durkee with Navigating Retirement. Thank you for joining us today. Today's topic is going to be what planning is about for 2021. Now, planning is actually a look ahead. Planning is proactive. Planning is making what you envision become a reality through true conscious intention and thoughtful action. Important part here is the thoughtful action. We want to put our plans into progress, and the act of planning is itself actually progress. So this time of year, we tend to think about our plans and make sure that we set them in motion. Some of us actually were proactive. Here at the Coastal Financial Planning Group, we sat down and did our annual plan in November of this year so we could actually start implementing and getting set up as we came into January. Took a break for the holidays and then came in ready to hit the ground running. But it's not too late to start planning now. We want to make sure that we take this time of year, we think about our plans, we set them into motion. And without a doubt, there's going to be some obstacles in 2021 that we might not know about yet. Hopefully they won't be as many as we were subject to in 2020. But let's not let that stand in our way. With a plan, we can address and overcome any issues that come up. So let's talk about what's in store for us in 2021. We certainly have some things that we can plan on now that we anticipate in the future. Number one, we know that interest rates are low. They have been for a while, and they will probably continue to be. This does affect savers, investors, and retirees, doesn't it? On August 27th of last year, the Fed Chair Jerome Powell announced that inflation, our second thing that we need to plan on for 2021, it's going to be coming. Now, the central banks were going to be targeting higher inflation in that announcement by Fed Chair Jerome Powell in August of last year. So most people have already seen inflation in their daily lives. Just take a sheet of plywood now that you get to build something with. I've seen them 3 times higher than they were, at the beginning of last year. So our loaf of bread has gone up, but inflation is a silent tax. It's a way that we can have to pay more for things. And so we need to plan on this. And what does this mean for savers, investors, and retirees? How do we plan for this? We should address this in our written retirement income plan. If you're interested in our process and receiving a written retirement income plan, you should call us at 735-5065. Remember, that's 843-735-5065. And now, another thing that we should plan on in 2021 is going to be market volatility. You saw it in 2020, fastest drop in the S&P 500's history in the first quarter of 2020. 20 days, S&P 500 drops 35%. But remember, volatility isn't always going down. It is also bouncing back up. It was the quickest rebound that we've ever seen, hardly, in the stock market indexes. But do we think that this may continue in 2021? All bets are pretty much on the table. Yes, we are going to see continued volatility. Market volatility is nothing new, but it still has a big, giant effect on our retirement income planning. If we're withdrawing money out of accounts when market values are down, that money stands a much greater risk of running out sooner in retirement. So we want to make sure that we are defensively managed in our portfolios, that we are taking advantage of management strategies that minimize downside risk and also help you participate in gains as markets are going up. If you don't have all the risk, you're not going to get all the rewards. So you got to understand, when you go to defensive management, you're not going to see your accounts go up as fast as the S&P 500 does on a rebound. Now, what could continued volatility in 2021 look like? And what does this mean to the average saver, investor, or retiree? And how do we plan for continued volatility in the markets? We make sure that we go through a process to analyze our risk. We do a complete risk analysis for our clients. We use a process called Risk Analyzer, and we look at where your risk is now versus where your risk may be desired to be as you enter into retirement. Analyze that, make some adjustments, help you take advantage of some actively managed investment strategies that are defensive in the bad times and opportunistic in the good times. Or also you might want to look into structured notes, an opportunity that has come very favorable in the volatile markets that we've had. Final thing that we should look at is taxes. Taxes, one of the big unknowns. I have clients asking me already this year, what are we going to look at for our required minimum distributions? Are we going to have one this year? Are we going to be able to defer out our taxation a little bit longer on our IRAs? Are our taxes going to go up on our IRAs? Should we convert to a Roth? Taxes could be one of the biggest stories of 2021. And the Biden administration has already stated their intention to raise taxes on certain portions of Americans' earnings. They say that tax rates will increase for those earning more than $400,000. They've also proposed changes to certain retirement account benefits. So let's make sure that we take advantage of taxes in retirement probably being different than they were in the past. We have a workshop coming up called Taxes in Retirement. You'll see the drop downs. Sign up for it. You'll get more information. All right. Or call us at 735-5065. That's 843-735-5065. We'll get you out some information on that. What does this mean for the average American, and how do we plan for potential changes to tax laws? Well, changes in rates, changes in tax brackets. Looking forward, this certainly could affect more than just the wealthy, and we want to make sure that we're proactively tax planning on top of this. Make sure that you stay tuned for future episodes on opportunities to take advantage of what little few opportunities there are left to save on your income taxes in retirement. We've got some great shows coming up here in 2021 on Roth conversions, other opportunities that can help us avoid the risk of higher taxes in retirement. That's all we have for today. Certainly some things that we need to be aware of. Remember, proactive tax planning. Make sure that you call us 843-735-5065 and also take advantage of our upcoming workshop, Taxes in Retirement. Glad to have you with us today. Look forward to you joining us on our next episode of Navigating Retirement.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Third-party rankings and recognition from rating services and publications do not guarantee future investment success. Working with a highly rated advisor also does not ensure that a client or prospect will experience a higher level of performance. These ratings should not be viewed as an endorsement of the advisor by any client and do not represent any specific client's evaluation. Generally, ratings, rankings, and recognition are based on information provided by the advisor. Please contact the advisor for more information regarding how these rankings and ratings were formulated.